Welcome back, fellow traders. Today, I'm thrilled to share a trading strategy that's not only incredibly straightforward, but also remarkably consistent, and the best part, it works across Forex, cryptocurrencies, and stocks. Let's dive in. Our first step is to identify the overall trend using the 200 exponential moving average, or EMA. Simply put, if the price is trading above the 200 EMA, we're looking at an uptrend. Conversely, the price is below the 200 EMA, it signals a downtrend. This gives us our foundational direction. Next, we'll focus on marking key support and resistance levels on our chart. The goal here is to patiently wait for the price to pull back and interact with one of these established levels. This is where the magic often happens. Now for the entry. Once the price has pulled back to a support or resistance level, we're looking for a clear candlestick rejection. Specifically, keep an eye out for patterns like a pin bar, an engulfing candle, or any candle that shows a strong rejection wick. Once you spot this, place your stop loss just below the wick of that rejection candle. For your target, aiming for a 1 to 1.5 or 1 to 2 risk to reward ratio is a solid approach. A crucial element of successful trading is discipline, and that means avoiding overtrading. Focus on taking only those high-quality setups that meet all your criteria, rather than trying to trade every single candle that appears on your screen. Patience and selectivity are your greatest allies. Now, if you're looking for tools that can help automate the identification of trend strength, momentum, and even trade signals, I highly recommend checking out VIP indicators. Their suite of indicators is designed to make your trading journey smoother and more insightful. I hope this strategy empowers you on your trading path. If you found this helpful, please consider following for more insights. Happy trading!